Hi, this is Jack Surgent, Chairman of Surgent Tax and Accounting Education, here with a quick news flash on the latest changes in individual income tax and business tax law. I just want to make everyone aware, I'm sure you might have read about it, but the House and Senate have both passed the extender legislation, so these extender provisions that we're going to discuss in just a minute here are going to apply for all of this year in 2014. Now, unfortunately, this extender legislation expires at the end of this year, so starting January 1st of next year, we're left in the dark again with what will happen with extender legislation. But when we have a Republican House and Congress, the idea is that next year we might get more comprehensive tax legislation. But I'd like to just take a couple quick minutes with you to review what's in the extender legislation that will be effective all the way back to January 1st of this year. In the individual tax extender bill, let's talk about those provisions first. The $250 teacher's deduction is back in the law, as is the extension for exclusion of gross income from discharge of qualified principal residence indebtedness. So that means if you have a client that receives a 1099-C for cancellation of indebtedness income this year on a principal residence related to acquisition indebtedness, that the interest would not be taxable income. Very important provision. They've also created an extension of parity for employer mass transportation and parking benefits. And also, if you are a individual who has taken out a mortgage and needed mortgage insurance to qualify, and your AGI is below $100,000, the mortgage insurance premiums can be treated as qualified residence interest. Very important to people from states without a state income tax is for purposes of an itemized deduction, you can again this year pick between taking state income taxes or sales tax. And again, the key, of course, is they have extended and allowed the sales tax as a deductible expense again. Some other important provisions, they have extended the above-the-line deduction for qualified tuition and related expenses. And then one other provision that I think is very significant is if you have clients that are over age 70 and a half and they have money in their IRA, they can take up to $100,000 out of their IRA, have that money go directly to a charity, and not have to report that as taxable income. So if they have not yet taken their required minimum distribution, then basically along those lines, you could do that. Also, as part of the extender legislation from a business side, they've extended the research and experimentation credit and the work opportunity credit. Also, in light of depreciation, some very significant extender provisions. They've extended the 15-year straight-line cost recovery on qualified leasehold improvements and qualified restaurant property and retail property. They've also extended bonus depreciation and the 179 expense election. And yes, that 179 expense election is back to last year's number of $500,000. Just real quick, one other particular provision that is important is with S corporations. If you've converted from C to S, you used to have, without this extender provision, a 10-year holding period. That is down to a 5-year holding period. And lastly, what I would consider important is an extension for credit of non-business energy property has been extended as well.